So one is the effect of the high interest rates. The second is Indonesia has gone through going through what we call a maturing process. If you look back, how old is the Indonesian startup ecosystem? 10, 12 years maybe, since the early days when Gojek, Bukalapak, Traveloka, Tokopedia first came onto the scene, right? And during those, the past 10 years, we've seen a boom, right? Not only in terms of traction, but also in terms of valuation. And then the pandemic hit, and then interest rates went up and so forth, right? But with like all booms, it cannot continue. Why? Because we also see that most of Indonesian startups, even at the unicorn, not at the unicorn level, they're not profitable yet. Right? You take a lot of the unicorns, they're not even profitable yet. So this is not sustainable. So we're going through a maturity process where it's no longer only about valuation and top line, which is revenue, but investors are starting to look at, hey, we cannot continue to invest in these startups and only looking at the top line. When are they going to become profitable? So at the end of the day, startups are companies also, right? They're just regular companies, right? Okay, the element of innovation and tech makes it different from traditional companies, but at the end of the day, they have to be self-sustainable. They have to be profitable. And we don't see that yet in the market, at least not as much as we want to. So now we are becoming much more selective. We are much more selective, and that when we look at startups, it's no longer about the top line only, but about the bottom line also. So profitability, or at least a path to profitability, is now one of the key criteria for us to make investments. And going forward, we will continue to be selective on this front.
Eddi, so do you see that with this selectivity, that if startups are going to IPO this year, what are their chances of success?
If the startups that are thinking of going to IPO are either profitable or they have a short path to profitability, go for it. We are supportive. As investors, we say, okay, that's good, because for us, we also want to exit. I mean, we are early stage investors. Let's say we invested 5-6 years ago. We cannot be investors forever, right? We cannot stay on the cap table, on the shareholding table at that startup forever. We also want an exit, because most of the time when I invest in a company, it's not my personal money, it's my investors' money. And I want to return those funds to my investors. So we want liquidation events. We want exits. We want either an IPO or a strategic sale or whatever form of exit, right? Startups just need to time it better than previously. So hopefully, if they do choose an IPO, either at the stage of profitability, cash flow positive, or the path to profitability is in the near future, so that when they go list and be traded on the stock exchange, people will look favorably and them saying, okay, that soon they're going to be profitable, they're sustainable, and I want to put my money and invest in their stock.
So, Eddi, on a more personal level, do you think this is a good time to work for a startup? For employees, do you think the stock option offered to them is promising?
It's a good question. It depends. If it's a growth stage startup, yes, meaning that growth stage in a Series B, Series C, Series D, pre-IPO, and that's because then you can see whether you're already at the stage of, oh, I'm going to be profitable. Oh, there's an exit maybe 1 year, 2 years, 3 years down the road, right? So if somebody wants to join a startup at the growth stage level, I think it's still a good time, right? If you're in an early stage startup, you have to be a little bit more profitable. I'm not saying you have to be a little bit more careful. I'm not saying no, but you have to look at whether the startup can survive, can be self-sustainable, has a path to profitability, and a path to exit also. Because at the seed and Series A level, which are early stage, anything can change. There's a lot of volatility still in the market, right? Including investment sentiment, right? So again, I'm not saying don't work for an early stage startup, but do your homework. Definitely do your homework.
So my last question for you, Pak Eddi, is for the future, how do you see this year going for startups and the VC industry in Indonesia?
We're still investing. Me and my friends, we're investors. We have dry powder. Actually, we have a lot of dry powder. So we have unused funds, unutilized funds, AUM, assets under management. So we do have a lot of that, but we're becoming more selective, right? So actually, we're chasing deals. We're chasing the same deals, and I see a lot of good startups being oversubscribed because everybody's going through what we call the good investments, safer investments. Whereas there are some startups that maybe in our eyes not as good or not as safe because the path to profitability is still long. They're getting no interest from investors. So it's becoming a little bit of a extreme. The oversubscribed and the underfunded startups. Are we still going to invest? Yes, even though more selectively, but we will continue to invest. For startups, you really have to manage your cash flow. Gone are the days where you can easily raise a new fundraising round every year. Now maybe you stretch that to 18 months or hopefully 2 years. And hope that by next year, maybe the sentiment has improved because the interest rate has gone down and foreign investment is more aggressive coming into Indonesia. But yeah, I'm still bullish selectively on the sector of the whole ecosystem. We just have to be more picky and selective now.